Carlo Cardilli, Head of Product at AlphaRank. Welcome to our conversations on best practices for growth at your financial institution. I'm delighted to be joined today by Maya Vance, who's the VP of Marketing at Gesa Credit Union in Washington. Maya, good to see you.
Good morning, good afternoon, Carlo.
So, for those of you who are new to this series, AlphaRank optimizes your online branch. Our clients increase funded loans and deposits, typically by at least 50% in the first 6 months, without spending an extra cent on marketing. The gains come from higher intent clicks, a more efficient journey, and prospects with a higher book to look ratio. So for any marketing campaign, whether it's a targeted email, postcard with QR code, or a Google ad, we'll tell you exactly how many dollars were booked from those clicks, and most importantly, how to get more dollars from that channel. Our insights come from a model that's been trained on 7 billion plus first-party data points from 200 participating financial institutions. The model provides recommendations to improve intent, reduce abandonment, and maximize click quality. As a thank you for attending, everyone in the audience can get a free 1 month subscription to the AlphaRank Optimizer. To see how this works for yourself with your own data, visit us at alpharank.ai. So for the audience, welcome. We want your participation. We want your questions. You'll be in listen-only mode at first. You can then submit questions using the Q&A panel inside of Zoom. When we get to the Q&A, we will try to unmute your line, let you ask your question live, try to have a genuine interaction. Or if you're super shy and want to stay anonymous, we'll just read it out for you. Everyone will get a follow-up email with links to the recording and any other relevant information from today's discussion. Now, let's get into the fun stuff, Maya. Welcome to the show.
Thank you.
Uh,
Thank you.
the title is fantastic. The stuff writes itself. 9,200% return on advertising spend, which, by the way, I gotta say, I peeked at your March numbers. They're even better than these February numbers we're talking about. So things just keep getting better at Gesa. So it really speaks to your team's work in truly optimizing your marketing performance. But before we get to that, let's get to know you a little bit better. Tell us a little bit about your background.
Absolutely. I'm currently the Vice President of Marketing here at Gesa Credit Union. I've been with Gesa for about 18 months now. Um, my career, I've had about 20 years in financial services with the last 5 years in the credit union space. Prior to that, I've spent time both on the company side as well as the agency side. I ran a consulting firm for a number of years, and I did a stint with a national non-bank lender, which has since been acquired and is now the entity that people understand as Zillow Home Loans. And that was a really exciting time. I actually feel very fortunate. I got a role in strategy very early in my career, and my career also grew up alongside the rise of digital marketing. So just as email marketing was becoming a thing, was around the time I was really getting my footing. And I love numbers because I love progress, and I'm very competitive. And so the numbers help me understand how I'm doing and where my opportunities are to improve. Um, and so I
If you
think,
can't measure it, you can't improve it, right?
yes, that's true. That's true. Um, and for me anyway, the numbers of it give my analytical side like an opportunity to be happy, and marketing still has that creative energy. So that's kind of guided my career to where I am today.
Fantastic. So you've got that agency experience that gives you a little bit of a founder mindset, which is um, also a little bit unusual in the credit union space. Heavily analytical, various marketing organizations, and now you brought that to the table at Gisa. Also, I think what sets you apart a little bit is your mortgage experience with a non-bank, non-credit union lender. And we find that credit unions in general are somewhat underweight in the mortgage market, which is curious because mortgage products can be very, very, very profitable. They're asset backed, they have fairly low default rates, say, compared to personal loans or vehicle loans. They have long durations, decent net interest margins. So that should be the thing that I think all credit unions and banks should be really trying to push and trying to compete with the all these online lenders that are not that great in terms of rates. But it is what it is. But what I wanted to you to talk about is the proof point that digital marketing can drive mortgages effectively for credit unions. And a lot of people are skeptical about that. So, and there's a long lead cycle. So why don't you toss a little bit about your approach to dealing with that long lead cycle, that deep funnel, and then how you can take things all the way to the low funnel activity and the bottom line.
Yeah, absolutely. So I think mortgage is an interesting animal because it is such a long consideration process for the buyer. Usually starts long before there's any engagement or indication of like somebody is looking for a home or might be refinancing a home. On the credit union side of things, there's also a really unique opportunity, and we ran up against this when I was on the national side of things, where we didn't have that local market expertise that a credit union has, and we also weren't able to portfolio our loans, and so like credit unions really do have a unique advantage. Um, but the digital marketing piece of it is that way to get people ahead of the curve, ahead of before they're actually calling and reaching out to people. They're understanding the consumer mindset and that shopping process. And then I would say for mortgage in general, it's about patience because with that digital marketing, that full funnel from awareness through all the way down to, okay, I'm ready, that like there's a step where I'm ready to finally talk to somebody and now they're much closer. If you can engage with them early and help them navigate their way, provide resources and content and education, you're already building a relationship with them. And digital marketing, like I guess because we all sort of start with that Google search, right? We turn to the internet to find answers or to at least get some guidance on what we should be asking. That's a great way to start building awareness of your offering and your business, and then helping move people down closer to okay, now I'm ready to have a conversation, and being there top of mind when they start engaging with people to get answers and understand what their next steps are.
Interesting. So most people would hear that and say, oh, more engagement up front. That means more spend. But getting down to brass tacks, your first step was actually the opposite. You figured out how to rationalize spending while keeping the engine running at full speed and getting better results. So tell us more about that super interesting phase one of your strategy.
Yeah, well, so I firmly believe that there's always an opportunity to optimize in everything that you do. And when I joined Gesa, we had approached our media very much as a one size fits all. So Gesa operates largely in Washington, but our field of membership also extends into Idaho and to Oregon. And we had a media approach that was basically east and west. So there's the east side of Washington, which is where Gesa um, is like sort of home court for Gesa because we're based in the Tri-Cities and we've expanded over time and have a presence now on the west side of Washington, which is very much Seattle. And
Hmm.
it's very
There could be
different.
two different states, really.
Yeah, I mean, Seattle is definitely like what everybody thinks of as Washington is actually Seattle, and the rest of Washington is maybe not so much what you think of when you think of Washington, i.e. Seattle. So one of the things that I wanted to look at was what if we looked at the different markets and the geographies and the differences not just in the people but also in engagement with Gesa and who Gesa is and what is the objective that we have. And so step one was really to say, can we do this? Can we be a little bit more tailored in our approach? Can we spend the same amount but potentially get more from that by being more relevant to the different geographies. So that was where we started. And that also helped build some credibility by not coming in and saying, oh, we're not spending enough money. We should be spending X or Y, or, we're in
Mm-hmm.
a high growth phase. So we should be spending more. That isn't where we started. We started with how can we do more with what we have? And there are a lot of things going on, a lot of change and trying to, kind of realign marketing to support this growth phase in a scalable way. So there was tremendous potential in doing that. And we ended up with, instead of just East and West, four specific tiers based on, are we trying to grow the brand? Are we trying to retain people? Are we trying to maintain our kind of foothold? And then we built out different um, plans based on those objectives.
Mm-hmm. So I could boil it down. Before, a little bit scattershot, trying to cover the whole state in the tri-state area. And phase one, rationalize it. Think about where's acquisition, where's cross-sell, what are different geographies, what are different products, where's your brand the strongest. Fantastic. How
Yes.
long did this phase one of rationalization take?
That one took, I would say that took probably about 4 months. We I kind of had to get the team on board with understanding this pivot so that they could help, working with the agency. And we talked with the agency about how we would figure it out. And Copacino is who we work with and were working with at the time. And we built out a model that looked at things such as population growth, growth of our like new membership growth, as well as how many actual branch locations do we have, how much competition is in the market. And so getting all of that figured out took a bit of time. And then there was obviously coming up with the different media buys for the different regions. So yeah, all in all, I think it took about 4.5 months.
So you're coming in, fresh approach into an existing, well-functioning marketing team, and existing agency relationships. Did you face any internal resistance in trying to implement this phase one?
I don't, honestly, no. I think everybody believed that there was an opportunity to be smarter, and everyone believed that there was an opportunity to optimize. So the biggest challenge was really figuring out where to start and and how to do it. Um, but otherwise, I think there was a general excitement and openness to trying something new, and also there was a lot about just being more like measuring and doing a better job of, okay, here's where we are and here's what we can measure. And we can't get all the way to booked product yet, but we can start taking those steps and painting that bigger picture toward how we're going to get to connecting the marketing all the way through to, okay, what is this doing for us in terms of deposit assets and loan volume, and telling that story and understanding where you're going from here all helped bring people along and get everyone on board.
Fantastic. So phase one, focusing each channel. Spend stays the same, but we're just going to focus the message, the geographical alignment with the brand and the intent. And then that brought us into phase two. Tell us about that.
Yeah, well, I think, yeah, so we're just getting into phase two, and part of that is a shift in the way that marketing is organizing our work. So, right now, or not right now, but when I started, Gesa marketing was very much set up like an internal agency where we were just doing our best to keep up with the demands of the business and what the businesses were asking for. Phase two for marketing and for the media is for us to become more of a strategic partner and work with the businesses on what are goals based on a deeper understanding of the markets and the geographies that we're operating in so that we can provide recommendations based on what consumers are actually looking for. We can build out those plans and start being more intentional and less reactive. And a big part of that is really, like I said, going deep into understanding all of the different products and the consumer motivators and obstacles, and then creating those plans that reach them um, with uh, solutions or the right message to help them understand what we offer and what is the benefit in working or choosing Gesa.
Excellent. Now, I wanted to go back to something I said earlier that was super, super intriguing. Scaling the volume of mortgages that you can drive through the online channel. And your experience in the mortgage market is super relevant. Um, the reason I want to bring it up is most financial institutions, especially credit unions, have this belief that, well, mortgage is what it is. I can't really scale it. I can't really compete with Rocket Mortgage and go by the right keywords. There's a sort of passivity to it. They might say, "Oh, my mortgage application has 13 steps. I can't make it any better. Funnel doesn't work." So they just tend to walk away from it. What we've seen you do is, despite the 13-step mortgage application and the complexity of the online process, your approach has actually worked out, and you've been very effective in driving growth in the mortgage space for Gesa. So, what stood out for you as the key points to get that flywheel spinning?
Yeah, I do think that that experience I had working with the national lender was really helpful. We were a small, scrappy team. I actually was hired to stand up marketing for that organization, and we were able to in that like environment connect our marketing effort all the way to booked product and show the ROI. So we would look at everything in terms of cost per funded loan, and that was a really
Hmm.
good indicator of what the return on investment would be. And I would say Rocket Mortgage wants the credit unions out there and the small regional banks to think that they can't compete. That's what they want. But the reality is they don't have very good service. They're not very flexible. And even if they tout having a super easy process from a consumer's perspective, the relationship and the trust and somebody helping you along matters. And so for me, the number one thing I think is, well, there's certainly patience, but there's also believing in your offer and that you
Hmm.
actually
Hmm.
really do have a great solution. So you can get past this, I can't, any of the negativity or I can't do it or it's too complicated. Um, and to me, I think that mortgage is really an amazing space because you're helping people get into homes. And
Hmm.
if even on the
It's the American
refinance,
dream, right?
it really is, and it's terrifying for people, especially first-time home buyers. Um, and but on even on the refinance side of things, you're still like has such a huge financial impact on your life and your I guess your mental health because like um, not to get off on a tangent, but financial stress is terrible, and that's where credit
Hmm.
unions really come in is helping
It's well
people.
documented. Financial stress actually leads to all sorts of bad decisions elsewhere in your life.
It does. And getting control of your finance also leads to all kinds of wonderful, like positive things to come out of your life. So um, I feel like I've gotten off track from what your question was, Carlo.
Well,
um,
precisely that. I mean, like you said, there's a belief that, Rocket Mortgage wants to put out there that credit unions can't compete. But in fact, you are proof that you can compete and you can drive performance up and, get people through this online funnel, build awareness, build a relationship so that when they're ready to go, you can put them right in the funnel and get that low funnel performance.
yes, exactly. And I think part of that is just thinking about the full funnel and remembering that this is a really long, slow consideration process, and being able to deliver you know, engaging information throughout that process until they're actually ready to reach out to you is a super important aspect of it. And having that long mindset of knowing that it could be 90 days, it could be 180 days before they're able to close on their home or complete a refinance. And so I think measuring for that longer period of time is also really important.
Yeah, make them comfortable, help them get through the FOMO.
Yes.
So I would then like to talk about something that really caught my team's eye, and they told me like, look, really need to bring Maya on the show. Got you nominated. We turned on a feature for Gesa towards the end of last year that at the time was a new feature. And it's basically about changing how credit unions and banks buy clicks from Google. So old school, you buy clicks from Google, you tell them what you're willing to pay by campaign, and basically you just hope that these clicks become people, because it's people that apply for these things, who actually finish the application that you can approve and will ultimately book. Now, because Al Frank, Agisa, and other financial institutions, we see the total trail of clicks all the way to the end of the funding queue. We enabled Gesa to tell Google, hey, we're not just paying you by the click anymore. New school, we'll pay you based on our outcome, which is a funded loan, whether it's a vehicle loan, a personal loan, a credit card, a mortgage, or even a funded deposit account. So now Google, your incentive is to deliver clicks that hit a certain target cost per funded application. So almost going back to your old school days in mortgage. By turning this on between October and February this year, that single change in how you bought clicks from Google allowed you to cut your spend on Google by 40,000 a month while still getting the exact same volume of funded loans. So, short version, hey Google, I'm not paying you for garbage clicks anymore. Only send me the good stuff. But to do that, that was a really bold step. So I think it's a testament to your leadership that the team felt empowered. Yeah, we can go do this. We can try to, um, push back against the Borg. We can be better purchasers. We were trusting the machine learning to help us guide this. But the hard question is, how did your team and you get comfortable with switching the signal back to Google, knowing that this could have very deep ramifications for your acquisition strategy?
Um, I think the biggest thing is understanding when you are optimizing or you think about how you're basically incenting the machine learning or Google toward a specific behavior. And talking through this with the team, like what is it that we want to do? Are we just driving clicks? Are we just or are we going to drive quality clicks? And
Hmm.
and we definitely could easily line around, we want clicks that convert. And so the deeper into the funnel that you can use as the optimizing piece to tell the machine this is the behaviors we want to see, the more effective you're going to be. From a team's perspective, it was excitement because if we can get to that as deep into the funnel as possible for that measure of optimization, the better we're going to do. We're going to deliver more quality, and so we're also keeping noise out of the funnel. That noise of with a mortgage, the time for the loan officers to have these conversations, the processors to get all of the documentations, the underwriters to evaluate the opportunities. We need those to be quality applicants that have high intent and are going to convert. So it wasn't that difficult to get the people and behind it and working in that direction. I think it's just understanding what is going to be the outcome of changing that model.
Hmm. Now, I think it's important to stress for the audience that it's not just about Google Ads. I'm going to touch on one more question for you before we turn to Q&A. And we often see that financial institutions have decent, not as good as yours, but decent returns on their Google ad spend. So ROI is 600% and above, but they have lousy, and I mean lousy with a capital L, returns on their meta spend. And often we have to tell our clients and their agencies, hey, the prospects you're getting from Meta are just not very good. They're either low intent or low quality, or worse, both. Now, Gesa stands out in the data that we see across all of our financial institutions for having very effective Meta campaigns. Your prospects from Meta have a high propensity to engage with the application to start it. They're pretty good about finishing it. And at the back end, they're quality. They get approved and they get funded. So the Meta yield at Gesa is amongst the best I've seen. So tell us a little bit, how much harder was it to optimize Meta relative to Google as your perspective as the team leader and, giving directions to the team?
I I have to give a lot of credit to Copacino, our agency partner, for having the people on their side to understand the way the different platforms and channels work together. I mean, without a doubt, they had a huge part in that. And from my perspective, we need to have a full funnel, and we need to understand how the different platforms and again, channels work together to deliver all pieces of that funnel. And the really, really important one is retargeting. I can't emphasize this enough. If you think about kind of an old school sales process where you're getting leads and you have salespeople following up on those leads and you have a nurture strategy for those leads, this is retargeting in my perspective. These are people who have raised their
Hmm.
hands, they've
Hmm.
visited your
Hmm.
website, they've shown interest, but they haven't converted. And retargeting, and this is something that Meta does really well. Retargeting is a great way to stay with them and follow along. And my term would be reactivate when they're ready to be in front of them. So there's a it's one of those things that is relatively straightforward. It's simple, but it's not necessarily easy.
Right, right. To me, it's like, and shout out to the Seahawks, but
Yeah,
it's like watching an NFL game and thinking, well, I could have caught that pass.
right.
But it looks easy on TV, but it takes talent and discipline.
Yes.
So
I think
for
it's not maybe not as much talent in this case, but discipline without a doubt.
right. So for the attendees, Cupertino Fujikato is Gisa's agency. They created product-specific high-intent audiences with the use of retargeting data to identify the prospects, as Maya said, that came to the website, showed interest in a particular product, but did not immediately move into the down funnel. But you stay patient, you keep engaging, you keep being in front of that audience. When the intent matures, you're there, and then you capture the down funnel intent. So now you've got all this stuff set up and optimized. We get a lot of this from some of our clients. They come and say, look, my agency is always asking me to spend more, and I feel I should spend more. I'd love to spend more. But how to go about selling this notion that we should spend more to our CFO and CEO so that we can make more from the online channel?
From my perspective, there are a couple of ways, maybe a number of different ways you can approach that. For me, I take stock of what I have. What do I have that I can measure, and what can I show that I'm getting from what I'm spending today? A simple, straightforward approach to kind of making that case for additional spend would be to say, okay, if I'm spending this much and we're getting X amount of new members, uh, what would it look like if we spent more? And you just take that very simple relationship between what I spend now to what is our new member growth, and you model it out to say, okay, if we spend 25% more, here's what that means in terms of new members, and so on and so forth. You can even do it the other way if you want. If we spent less, we would get less, and that's a pretty straightforward conversation to have, and it's a starting place. Uh, I think to help demonstrate that if you want to grow faster, this is what you can expect from the spend, and there will be efficiencies gained. So in many cases, you're actually under promising. And then over time, you get, as you're able to connect deeper into the funnel, it gets more sophisticated and more refined, but it's a starting place for that conversation.
I think that ties into very much the way we would approach it. So, for folks in the audience, if you're interested in optimizing your online branch, uh, the first place we would start with a competitive assessment is to take your regulatory data, your 5300 if you're a credit union, your FFIC report if you're a bank, plug that into a custom valuation model and come back to you with an expected value by product. Obviously, mortgage is going to be at the top of that list, and probably personal loan is going to be at bottom of that list, but your mileage might vary. And have a valuation for each of these products originated in the online space, and then tie that back to your actual performance. So that gives you a baseline that is finance friendly. And you can start having those conversations with your CFO and eventually your CEO. So that takes us to the bottom of the hour. So Elizabeth, I think we have some questions queued up in the Q&A. So let's get into it.
Yes, we do. Thank you. So, the first one that we have here, this gentleman is no longer here, but he asked, so I won't unmute him. He said, "We tried digital marketing for mortgage, but found that pricing is so critical that being 1/8 off the best rate kills response. What is your experience with pricing for digital mortgage acquisition?"
Pricing strategy. One of the things that, when I worked for the non-bank national lender, we never advertised rate. We weren't the most competitive rate, but we were very much focused on purchase. I think that rate sensitivity really comes in from a refinance perspective, but um, when it comes to like the purchase side of things, a lot of the decision making actually comes down to relationship and having the right loan officers in place to build that relationship. And I think that things that are equally as attractive as that rate are the different programs that you offer, 0% down programs, first time home buyer programs, and having the knowledge and expertise. These are all things that you can advertise and be just as effective if you're reaching the right audiences.
Fantastic.
Thank you. Okay, so we have a few more questions that came in, and please feel free to chat additional questions. So the next one is, how do you know that the agency you're working with is the kind of agency that can carry you forward in 2026 in this age of data and generative AI?
I think it's really important to understand and what is it that they offer in terms of research and analysis and reporting, and who are the people that they have in place, and getting to know those individuals and what leadership and expertise they bring to the table, to me, is imperative. Um, a lot of agencies have found a niche in creative, and so there's definitely a place for that, but to be successful in the digital space, I think that there's definitely a need for a strong analytical team and a flexible, nimble team that's willing to experiment and explore and bring new ideas and have transparent conversations with you about what's working and not working so you can work together. I think that collaborative relationship is also really important.
Fantastic.
Yes, okay. We have another question here that says, what is your average monthly spend around on these channels? I heard an amount that you saved, but not a percentage of that overall spend. So they're wondering about the percentage of overall spend that you saved.
Um, we didn't save. So I'm not sure if I'm following the question. We reallocated our spend, and what we've seen is a significant improvement in our growth rate and our deposit volume and loan volume growth. So if specifically with mortgage from um, February this year, we actually did twice the volume that we did in July, prime buying season of last year. We've had some of our highest mortgage, I guess, booked loans month in Gesa history over the last, I guess, since October. Um, so we've just seen significant improvements in what we're delivering at the same spend.
Thank you.
Yeah, okay, hopefully that answered that for that attendee. If anyone has any follow-up to that question, please just chat it in. Okay, and then the next question that we have here is, what would I look for to make sure I have the right internal team? If I don't, what process should I use to get that talent into my organization?
That's a good question. I think the first step is evaluating the skills and I guess unique experiences, expertise that you have, and then identifying where the gaps are. When it comes to digital marketing, I think one thing that is different in this space than just general marketing experience is that analytical nature and that like excitement about numbers. That's something that I really look for in building out a digital marketing team. I think performance driven or performance minded people who are naturally gravitate toward numbers is really important. But that's not to say if somebody hasn't in the past demonstrated that analytical nature doesn't mean they can't necessarily be shown how to do that. But I would say that definitely in this space, I'm looking for in bringing new people on. I'm looking at how are they quantifying things and how creative are they and how they're quantifying. And by creative, I don't mean making things up, but
I like large language models, right?
but just like being very looking for all of the different ways you might be able to say this versus that and directionally how do things compare. So when it comes to talent, I think it's a lot about how people are thinking about it, and definitely those people who are coming in with that desire to quantify, and you might have those people on the team, they just haven't been introduced to it, and so you have to spend some time vetting that out too.
Fantastic. We got time for a couple more, Elizabeth.
Okay, sure. So the next one here says, my CFO acts like marketing is just a cost center that does woo-woo stuff. How do I reposition marketing as a revenue generator?
I think that in a situation like that, it's important to build a relationship with the finance team. My experience is that everyone knows they need to be marketing, because if you were to suggest, well, let's not market, nobody's going to be on board for that. I promise you. Everyone's going to say we can't not market. Um, and so working with the finance team to understand, like, here are the things that we can measure today, here are the things that we would like to measure in the future, and coming together, like finding that place where um, you can sort of align on a measure and use that as a starting place to again compare against over time. My experience is that when you build that relationship, at the end of the day, everybody wants the same thing. Everyone wants to know that the money that is invested is delivering value for the organization. And partnering on how you solve that problem kind of gives everybody a stake in the success, which I think is important. And also, you need to that helps you understand what are the motivators of the finance team, how are they evaluating things, what do they want to see, and that it's at least a really good starting place.
Fantastic. Elizabeth, we have time for just one more before we have to let Maya go.
Okay, sure. So, let's see here. So, all right, we'll do this last one here. Our credit union serves 12 counties in Michigan, Wayne County, which is obviously densely populated with a lot of branches, and a periphery where our branches are few and far between. How is that different from Gesa, and how would your strategy change in our context?
Um, so I think, Gesa is different in the Tri-Cities where we have many more branches.
Can you contextualize Tri-Cities? That's like Kennewick, Pasco, Richland, right at the kind of bottom of the state kind of thing?
Yeah, it's southeastern Washington. The Tri-Cities, yes, Kennewick, Pasco, and Richland, collectively about 300,000 people. Um, So and this is where we have more branches. This is where our roots are versus Seattle, which is, like the metro area, it's over
Hmm.
4 million people. And we don't have the same branch, like the, the ratio of branches to people. So we have a very different strategy here than we do in the Seattle area and on the west side of the state, where there is a lot heavier population. I think a cornerstone of what we need is to create a physical presence without having a physical presence. To me, in a marketing plan, that means a lot of out of home. It means creativity in how you do that. Um, High school credit unions are a really big deal for us, and we have affinity cards. And so we are engaging in that community in different ways. And you just have to think about the difference between what is our branch presence creating versus what do we need to create in different ways.
Fantastic.
And I think,
Maya,
do we have time for one more, Carlo, that just came in?
sure. One
Okay, I
more.
will unmute this woman. I think her name is Shayna. If you'd like to ask it live, I just allowed you to talk about the digital acquisition last question you had.
Hello, can you
Yes.
guys hear me?
Yes, we can.
Yeah.
Welcome,
Hi,
Sneha.
Maya. Hi, Maya. Hi, Carlo. Thank you so much for an incredible information session. Maya, you spoke about the digital acquisition strategy for first-time home buyers. Can you
Hmm.
just talk a little bit more? How did you allocate your resources, and what are the best strategies?
For first-time home buyers, and what we looked at were what are the programs that we offer and what are the features that we can talk about that would resonate with first-time home buyers. Um, and that what's really interesting about this is that we're also always testing our messaging. And so that both the insight into the shopper mindset and that buying process, as well as having a lot of different messages and markets to optimize toward, helped us land in things like 0% down and first time homebuyer programs as key messages. Um, from an acquisition strategy, I think it's important to make sure your audiences are configured specifically to purchase, that purchase is taken as like a separate audience from refinance. And there's, because it's such a long buy-in process, the machine learning optimization that or that you're going to get from those algorithms is really important because those behaviors that are indicative of being a first-time home buyer are what's going to help drive the relevance of that message that you have.
Fantastic. If I may add in, um, another financial institution that we work with that's had tremendous success with first-time home buyers is Municipal Credit Union out of New York. Obviously, competing in a very, very competitive, highly urban market. They have this terrific 3% down first-time home buyer program, and we'll put the details of that in the outbound email, Sneha, so you can see, compare and contrast different approaches. It's obviously takes a little bit of work to make a 3% down loan work, especially in this sort of superheated housing market, but it's well worth taking a look at that.
Okay. I just have one more quick question for you. What are your thoughts on PMAX?
PMAX. So PMAX is fantastic, but with great power comes great responsibility. PMAX can easily get off the rails and just trash your entire Google campaign. You really have to tightly constrain it and make sure it's running in pure acquisition mode and not going and cannibalizing traffic that you would have gotten anyway. So yeah, we could, you know what? We should just do a show just about PMAX, Sneha. So thank you for bringing that up.
Yeah, that would be helpful. Thank you.
Well, I wanted to thank you, Maya, for the generosity with your time, the openness with which you brought this conversation to bear and answered all these questions. And to you and to the audience, a heartfelt thank you. Bye-bye.
Thank you, Carlo.